How small apartment investors can evaluate and choose tax professionals. Develop a list of key questions for potential tax professionals. Experience with real estate taxation. How much experience do you have working with real estate investors, specifically in multifamily or apartment investing? Understanding of deductions and credits. How do you help clients maximize deductions and credits related to mortgage interest, operating expenses, and energy-efficient improvements? Do you have experience with 1031 exchanges and cost segregation studies, and can you help me navigate these for tax deferral and enhanced deductions? What is your approach to managing audit risk, and do you offer audit representation if needed? How often do you check in with clients on tax strategy? Do you provide proactive guidance throughout the year? Evaluate the professional's communication and collaboration style. Accessibility and responsiveness. Ask about availability and response times. For example, how quickly can I expect a response to my questions? And do you offer regular check-ins for tax planning and strategy updates? Collaborative approach. Inquire about how they work with other professionals, such as property managers, attorneys, or other advisors. For instance, how do you coordinate with property managers or financial advisors to support tax compliance and planning? Fee structure and services. Ask about pricing models, whether it's hourly, retainer, or a fixed fee, and what services are included. For example, what are your fees for tax planning, preparation, and consultation services, and are there additional costs for services like cost segregation analysis? Seek insight on specific tax-saving strategies. Cost segregation and accelerated depreciation. How do you assess whether a cost segregation study would be beneficial for my properties? What is your experience handling 1031 exchanges, and can you guide me through the timeline and requirements to ensure compliance? How do you help clients prepare for capital gains, tax, and depreciation recapture upon sale of a property? Verify professional credentials and experience. Certifications and licenses. Verify certifications such as CPA status, tax attorney licensure, or relevant real estate tax certifications. Client references and reviews. Request references from other real estate clients or check online reviews. Can you provide client references or case studies on tax savings achieved for real estate investors? Discuss their approach to staying informed on tax law changes. Continuing education. Ask about ongoing education and how they stay updated on tax law changes. For example, what methods do you use to keep current with tax regulations, especially those impacting real estate? Impact of new tax laws on strategy. Ask how they would adjust tax strategies based on recent or anticipated changes in tax laws. How do you adapt your tax strategies when new tax laws are passed? Additional tips for working with tax professionals. Regularly review tax goals and strategies. Revisit tax goals with your CPA or advisor annually to ensure alignment with financial objectives and any changes in investment strategy. Document all professional advice and communications. Maintain detailed records of all tax advice, correspondence, and planning sessions. This documentation supports transparency and serves as a reference for future tax planning. Plan for year-end tax strategy sessions. Schedule an annual year-end review with your tax advisor to evaluate deductions, review depreciation, and plan for any large transactions in the coming year. Summary. Working with tax professionals and advisors is essential for apartment investors seeking to optimize tax outcomes, ensure compliance, and develop effective tax-saving strategies. CPAs, tax attorneys, and other specialists bring invaluable expertise that enhances tax planning, minimizes risks, and maximizes deductions and credits. Small apartment investors can evaluate potential tax professionals by asking targeted questions about experience, services, and communication style, helping them choose advisors who will effectively support their tax goals. Collaboration and regular check-ins with tax professionals enable investors to stay informed, adapt to tax law changes, and maximize after-tax returns in apartment investing.